In the energy quadrant today, taking a look at the March crude oil contract, whose range continues to hold on the low end, $52, on the high end, $53.70 in terms of the range we've been in the last few days. But that range continues to tighten. And despite finishing the day down about 38 basis points, right in the middle of $52, about $52.58 or so, we had a high that was up 91 basis points and a low that was down 92 basis points, 53.25 on the high, 52.29 on the low. And while we are lower today, we are still strong overall, up 8% on the month so far in January, still another trading week to finish, and we're up 8 of the last 9 months. So it's been a very, very strong trend since reaching those lows 9 months ago. Now, demand is still the focus. Demand side concerns remain centered in the market as Asian countries battle a pandemic while countries in Europe are looking at tighter lockdowns, and the spread of new strains of COVID-19 are slowing the idea of any fast reopening, really not just in the UK and the EU, but across the globe. Countries are being more and more cautious, and U.S. production has not yet begun a notable rise after falling 2 million barrels a day despite rising rig counts. Rig counts have been rising. They're up 20 of the last 24 weeks, and we're not seeing that bump up in U.S. production yet. So that's why this range is tightening. The demand is supposed to be showing up, but isn't, and the production is supposed to be increasing, but isn't, especially on the U.S. side of things. And Iranian oil exports actually rose in January. So a very mixed supply and demand picture in the short term for crude oil. This is the nature of that crude oil contract. It trends, then consolidates, then trends, then consolidates. Right now, we're clearly in one of those consolidation patches.